So you've just handed over the keys to a new company car for one of your team members? That's great. But hold on a sec. There's a small piece of admin that, if you miss it, could seriously trip you up. We're going to show you exactly how to avoid a really common and costly mistake with HMRC.
And when I say costly, I mean it. Just one slip-up can hit you with an initial penalty of £300. And believe me, that's just the beginning. Getting this right isn't just about bureaucracy. It's about protecting your business's cash flow.
So in this guide, we are diving into exactly how you notify HMRC about a company car change, specifically for the 2025-26 tax year. We'll cover the forms, the deadlines, and the whole process, so you can handle it like a pro every single time. And you can trust what you're hearing because this guide has been put together by the experts at Pro Tax Accountant. They're one of the UK's leading accounting firms, and they deal with this stuff day in, day out. So you're getting top-tier, up-to-the-minute advice. Here's a quick look at what's on the agenda. We'll start with why this is so important. Then we'll look at the key form you need, walk through the 3-step process, nail down those all-important deadlines, and finally, talk about getting expert help. Let's get right into it.
All right, first things first, why all the fuss? I mean, why does HMRC care so much when you swap out a Ford for a Vauxhall? Well, it all boils down to your tax responsibilities as an employer.
At the core of all this is something called Benefit in Kind Tax, or BIC for short. You see, if an employee can use their company car for personal trips, HMRC sees that as a perk, a non-cash part of their income, and that perk is taxable. The amount of tax depends on the car's value, its fuel type, and especially its CO2 emissions.
Look, here's the bottom line. A new car usually means a different BIK value. When you report the change quickly, HMRC can adjust your employee's tax code. That means they pay the right amount of tax, no nasty surprise bills, and no overpayments. For you, the business, it's even simpler. You stay compliant, you avoid fines, and your books are always ready for inspection. Okay, so you know why you have to report it, but how do you actually do it? Well, that brings us to the most important tool in your kit for this job, the P46 car form. The P46 car is basically your go-to form. It's the official, dedicated channel you have to use to tell HMRC about any changes to company cars that are available for private use. And let me be clear, this isn't optional, it's a legal requirement. Now, you don't need to fill this out for every vehicle on your books. It's really important to know the difference. On the left, you see when it's an absolute must, giving someone their first car, replacing an old one, or taking one away. But on the right, you've got key exceptions, like pool cars that are strictly for business use or emergency vehicles. And listen up, because this is a big one. Here's a pro tip that catches so many businesses out. For a few years, you didn't have to submit a P46 car just for replacing a car, but that changed. Since April 2023, that rule is back, so you absolutely must report a replacement. It's a huge update that's easy to miss, so make a note of it. Right, let's get practical. I'm going to walk you through the whole process, and honestly, it's just 3 simple steps. We'll make this super clear. It really just boils down to this. Get your info, pick how you'll send it, and then send it. That's it. Let's dig into what each of those steps actually looks like. To bring this to life, let's follow a guy named George. He's a fleet manager up in Manchester. He's just sorted out a shiny new hybrid car for one of his top salespeople. Now he needs to tell HMRC. What's his first move? Step 1 is all about preparation. George has to do with homework. Think of this slide as your pre-flight checklist. He needs the basics, of course, like the employee's NI number and the car's list price. But with a modern hybrid, he also needs to get really specific, like its CO2 emissions and, crucially, its zero-emission range. Getting all this sorted up front saves a massive headache later on. Okay, George has all his info in a nice little pile. Now, how does he actually send it off? Well, he's got a few options. He can use HMRC's own PAYE online service, which is very popular. He could use his company's integrated payroll software, or he could go old school and post a paper form. As you can see, though, digital is definitely the way most people go these days. And here's another pro tip for you. Going digital isn't just easier, it's way faster. That means your employee's tax code gets updated much more quickly, so they're paying the right tax almost straight away. Now, stay with me. The next bit on deadlines is absolutely crucial, and it's where people often get caught out. Now, for the part you absolutely positively cannot afford to get wrong, the deadlines. HMRC is incredibly strict on this, so let's make it crystal clear.
HMRC splits the tax year into quarters. The basic rule is this. You get about a month after a quarter ends to get your form in. So, for example, if a car change happens anytime between early April and the 5th of July, you have until the 2nd of August to report it. The best thing you can do is get these 4 dates into your work calendar right now. And remember that £300 fine we talked about at the start? Well, it gets worse. If you miss the deadline and still don't submit the form, HMRC can start adding on daily penalties of up to £60 a day. It can spiral into a very, very expensive admin error. All right, we've covered a lot of ground. The why, the what, the how, and the when. So let's wrap this all up with a quick summary and talk about what you should do next. So if you remember nothing else from today, make it these 5 points. 1. Always use the P46 car form. 2. Get all your info together first. 3. Go digital. It's faster and more accurate. 4. Put those quarterly deadlines in your calendar right now. And 5. Don't be late because it will cost you. It really is that simple.
And just before we finish, a quick but important note. The information we've shared today is for general guidance. Tax rules can be complex and your company's situation is unique, so please don't rely on this alone to make financial decisions.
For advice that's tailored specifically to your business, you should always speak to an expert. If you've got any questions at all about your company car fleet or any other tax matters, get in touch with the team at Pro Tax Accountant. The details are on your screen now. They'll make sure you're doing everything by the book. After all, isn't peace of mind the ultimate employee benefit?